The other thing to realise for somebody in Russia now who's starting a career at, say, the age of 20 or whatever it is, unlike grandparents and great-grandparents, you will live to the age of 80 plus. Okay.
At least we hope so.
It's very, very likely.
Mm-hmm.
You know, Russia is a developed economy. The health service is developing. Education is developing. Foreign investment and government state investment is developing.
Mm-hmm.
Life expectancy is rising. The state is working on addressing demographic issues that have resulted from history.
Mm-hmm.
This means people will live longer, and you have two choices. You can expect somebody else to take care of you, either the state or your family, or you can take care of yourself. And in modern Russia, you have the freedom of choice to take care of yourself, and it's much better. It's much more satisfying to be able to do it, to be in control, and having a financial plan from an early stage enables you to do that. So that you can look, and you might only have a small income now. Right now, maybe paying your rent and feeding yourself is uses everything, or nearly everything. But if you start to save now, in your 20s, the flexibility you have to realise aspirations that your forebears couldn't is huge.
Mm-hmm.
Okay.
Okay, thank you. Maybe you'd say some couple of words about most common mistakes in personal financial planning, in managing assets,
Okay. So
managing debts.
yeah. Well, when you work with a financial advisor, he will introduce you to a range of solutions to help you. Eventually, it's a simple set of tools available. People either have already got some money, or they want to save some money out of their income. And the tools that enable you to do that, beyond banking, these offshore international products that are quite low cost enable you to access the whole of the international markets in terms of savings products, in terms of underlying investments that create returns. And the biggest mistakes are two things. One is not to do it. And two is to pick investments that only give you high headline returns. High headline
Especially
returns.
without understanding risks that stand behind this.
Absolutely. Okay. Good financial advisor will explain to you the range of risks that come with investment, the fact that
The
planned
actual risk-return
absolutely.
relations.
Yes. Everybody wants the best return on their money.
Absolutely, me too.
Yeah. How much do you want to lose? How much do you want to risk losing?
Yeah.
Okay.
That's a very important question, which a lot of people even do not ask.
Yeah. Over the last 40 or 50 years, developed market equities have returned an average of 8.5% approximately
8.5
per year. Okay.
In what currency?
On the dollar.
On the dollar.
Okay. But equity investments go up and down like that. Okay. We call this volatility. Okay. And we live in a world where there are economic cycles. Okay. Eventually, you need to take money out of your investment. So where you are on the cycle, could be important. If you're in a very volatile environment, you could be in a position where things are not as high as you'd like. If you diversify your portfolio, you can achieve the same kinds of annual returns from much lower risk, much lower volatility, by having investments in different classes of assets. And that will include equities and bonds. And those equities could be split into developed markets and emerging markets. Emerging markets give higher returns, but they're very volatile. Bonds could be developed and emerging markets again, but bonds are debts from companies as opposed to equities, so there's great certainty of the cash flow that comes out as a return.
That's the key difference between bond and share.
And there's a good certainty, depending on the credit rating of the entity, that that money will come back to you at the end of the day. And so they make a much more secure investment, but a portfolio will consist of a mixture, and then some alternatives, such as commodities, such as property, such as possibly physical assets. Very popular one here in Russia is physical gold. Okay. Globally, the highest performing category of all over time has been real estate. So,
and a lot of people thought that real estate will never go down in prices.
Real estate does go down in price.
But a lot of people thought that it will never happen.
Also,
abroad, in Russia, even developers had the same opinion.
Absolutely.
I had a client of mine in terms of our corporate services. They were a relatively large Russian development company, and people from there were 6 years ago. They were absolutely sure that in Russia, real estate will never go down.
Real estate is like anything else. It goes up in price and down in price according to supply and demand. And in periods of great supply, like we see around us in Moscow at the moment, prices are flat, yields are low. Okay. Now, of course, you might argue this is a very good time to get into real estate because prices are low. Apart from the lack of clear direction of travel for real estate prices in the medium term here, a single flat as an investment takes up a very big proportion of an ordinary person's investable money. Most people can't afford it, but when you can, it's usually everything. Now let's say you have a medical bill that's unforeseen. You can't sell the kitchen and keep the rest. You have to sell the whole flat. So a diverse portfolio of liquid assets that you can sell not only sets you on the road for long-term stable growth, but you can realise parts of assets as you go for unforeseen emergencies. You're not tied in like you would be with property. Transaction costs are much lower. People like property because they can see it and touch it and go and open the door and they can walk up to it.
It looks like more safe.
It looks more safe. But it's only... What safety really means is your ability to turn it into cash, to look after your family, or to satisfy your needs at the end. And actually property is quite hard at short notice to deal with that.
It's illiquid.
Yeah, exactly. So a diverse portfolio of liquid assets is something suitable for everybody. It doesn't matter whether you are saving 5,000 rubles a month or $5,000 a month. Same principle applies. Okay, and the benefits that are available through the kind of international structures I talked about, that you mentioned, is that whether it's 5,000 rubles or $5,000, you can invest in diverse funds that give you access to the different types of asset classes. They're readily realizable. They limit the volatility and held for a long time in a tax-efficient environment, the ability to set aside funds for your long-term goals is straightforward.
Okay, so what can you say about most popular right now, and maybe, to my personal opinion, one of the most risky types of investments, like cryptocurrencies? What do you think about it? Is it just one of instruments, or is just fake, or
it's
anything else?
Crypto, for the most part, is a complete gamble. Okay, so to my view, it doesn't form part of your financial plan. Okay, for somebody with a big pool of assets, I often say, okay, well, let's have a core portfolio. This is the engine that's designed to deliver your ultimate goal.
And then a small portion with which you can play.
A small portion with which you can play. I call it explore. Okay, and there are lots of things that are very interesting that can go in there. Hedge funds of all sorts, where there's complex financial instruments that can deliver highly leveraged returns that can be quite spectacularly good, but they do have a lot of risk in them. Okay. Further up the risk scale, I would say falling off the end comes something like crypto, with no track record, no regulation. Why is it popular with people who issue it?
Assets, not even assets behind it.
There are assets behind it, probably no business plan behind it, and no market for turning it back into cash.
Just psychology of people who put money in it.
Okay, so if you want me to invest in crypto for you, I'd rather you give me the money, I'll go to Las Vegas for you, and I'll share half the returns. Okay, there's greater chance of returns that way.
Okay, thank you.
Okay, so that's a pretty blunt view of crypto. Okay, why crypto is working at the moment? Crypto is a token, and it represents a future service, and it's designed that way. It's a capitalization on the idea of tokens, which originated with things like Bitcoin and Ethereum. It's a capitalization of that to enable people with largely unsupportable business ideas to raise capital from the unknown individual without those people having to go through the regulatory hoops that protect the investor. So at the moment, it's popular because people want to raise money without protecting their investors. I don't like that.
So, if I understand you correctly, the key idea, for example, about ICOs,
yes,
is that people who have some business idea, well, it is a good situation where they actually have a business idea. They want to raise money for their startup, for example, or for their business idea, but people who are proficient in credit analysis or investment analysis, they do not want to put money in this business. And the only choice for these people with some ideas with unpredictable outcomes is to start things like ICOs and to use it as an instrument to attract money from unproficient people who do not actually understand in what they invest.
That's basically true. I mean, I think one of the things that most puts me off the crypto environment, the ICO environment, is the acknowledgement by those organising the ICOs that the thing that is making them successful is what they call in English the hype. Now, hype is just creating noise and effectively, playing a numbers game to try and attract some cash without any certainty of return.